It's too easy to use a baseball analogy or any sports analogy in an economic cycle because there's so many things that can cause a rain delay or get a game postponed. And I think that could be policy, right? Policy mistakes, whether it's monetary policy that gets too aggressive at the wrong point in the cycle, fiscal policy that stimulates when we didn't expect it to, and the third is trade policy. And I think that's our larger concern. So the only thing that I would disagree with Ray here and everything that he said today was that China is a big deal. And I think it gets larger, and I think it's a longer game. So, you know, the problem was I thought for a period of time that good news around trade would be choreographed around the election cycle, and it feels like the escalation is going to be choreographed in the election cycle. And I think that just makes this problem worse and longer, and I think it's going to be a drag on the global economy.
Jeff, where do you think we are? I mean, if you think we're in the seventh inning, I don't know if you do, but will China be the factor that sort of speeds the game along to its conclusion?
Yeah, that's probably a fair point. But secular bear markets tend to last 16, 17, 18 years. The 1949 to 1966, yes, there were pullbacks, but it didn't stop the secular bull. 82 to 2000, yes, we had the crash in 1987. Didn't stop the secular bull market. So if you want to start your count from March of '09, we're going to be 10 years into this thing. We ought to have another 7 or 8 years left, and it's past this prelude.
Well, even Dalio said elsewhere that we've been in the seventh inning a long time, and ball games, to torture the metaphor even more, why not, can go into the extra innings. Art, I want to ask you about something he said there, and I didn't hear whether he answered and followed through or not this morning. He said it won't, when things go bluey, it won't be like the same in terms of the Big Bang debt crisis. It'll be a slower, growing, more constricting debt crisis, but it will have, I think, bigger social implications and bigger international implications. That sounds pretty ominous to me. What is he driving at there, Art, if you can draw some surmises?
Yeah, I think the three things he's really bringing to bear in that statement really have to do with the disparity of wealth that we have. We've never seen a larger disparity of wealth from top to bottom. I think that's a large and growing issue. I think that, you know, that's something that needs to be, you know, looked at very directly by policymakers. I think the second thing really speaks more to how much global debt there is. And I think he's less concerned about the debt to GDP ratio in the United States, but a lot of the emerging market debt that's dollar denominated in an environment where we'll probably continue to see strengthening dollar, that gets even larger. And the third thing I think is, what to do with European debt, especially with a lot of the hotspots going on, whether it's Italy or Turkey or, any of the things that, some of the European banks are exposed to. So my guess is, it's a combination of wealth disparity that's clear and present in terms of danger, and a lot of global debt and a lot of that that's dollar denominated, which continues to get worse before it gets better in terms of strength of the dollar.